Just getting started here, McGraw. We didn't hear anything from you either yesterday, but it's okay. You bailed on us. Kidding, of course. Welcome back. All right. So yesterday was more new all-time highs. Virtually no pullback. Went kind of straight up there to different degrees. This was the pre-market chart from yesterday, this little grayed area there that we were looking at. And let's just scale it back a little bit, do a little review. It was the gap up, and we talked about how the markets tried to go down. You could see there at around 715 on the chart there, and came right back up. That was a bullish sign. And at the open, well, buyers just continues to step up, and it just went right up into the 1030 reversal period. As you can see the time on the bottom of the little chart there, and then went quiet, but did not drop. No pullback, right? So this is the concept that we call creating support. And let's just move that down a little bit for the number. It starts with creating a swing low or a pivot. Once a pivot forms, we then have a reference point where buyers stepped up for whatever reason. Right? They said, oh, there's enough of a pullback. I want to get in this real bad, wherever they're going to put their bids. And as it creates a swing low, then we then have a reference point where buyers theoretically will want to step up again on the retest. And that was the retest that happened at around 1230. And then it was just really quiet. And then buyers stepped up. And that tells us that, bullish price action, expectation is for higher prices the next day. And so now got some whippy stuff going on here. You can see what spiders went up there and drop, recovery. So kind of whippy price action going on right now. Not unexpected after a gap and go kind of day. As you can see here on the daily chart, and close up near the high. So all good. Trends are up, all time frames. And the assumption is it keeps going up until we get a change. Of course, changes happen on smaller time frames first. And so we get a line in the sand. It's kind of the same spot on the hourly chart as it is on the daily chart, because this was the consolidation that was happening. You can see the little line moving across the charts there on the bars on the daily time frame, the little bottoming action that was going on there, and then the gap, and of course the go. And so right now they're at 313, right? Yeah, I guess just up a little bit. So just hanging up there near the highs, no gap of significance, but still, buyers on the dip, as we could see on the intraday chart. And the weekly chart still at the beginning of the week there, but relatively narrow bar. Maybe it'll increase in range by Friday. We'll see. But as also mentioned, last week was a screeching halt in momentum to the upside. So it was a resting kind of a week. And so now at new all-time highs, we can only assume that it's going to go higher until it doesn't. Right? Pretty simple. Qs, same story, kind of just a peekaboo above the high though. So a little bit of relative weakness, but one of the things mentioned in the newsletter was, where is it? Just looking for my, here. Semiconductors, which got a little bit of a shellacking last week on a downgrade for outright sells on some stocks. They bounced up, but FDN, right, new recommendation in the ETF letter, right, cleared the highs, and it's got room to keep going higher. So thinking of that would bring up the rear, and it's going to help the Qs. So we'll see if that continues to do so, enabling the Qs to go higher. Looking at the futures, got a little bit of topping tail there. It's still early, right? Quite early. And so we'll see where this ends up at the end of the day. And just scrolling back, you see the run up there overnight, and then all the way back down, some profit taking. No real damage done. A little upside shakeout. It could be the beginning of something a little bit more. But again, let's keep it simple, stupid approach. weekly uptrend, hasn't even broken a prior weekly low, right, in several weeks. So you just keep tracking them. Keep tracking the lows. That's simple. That's your swing low there on the daily time frame. So the concept of a greater than 100% retracement is one in which it says on the pullback after it takes out the prior high, historically you get a stolen momentum. Doesn't mean the end of the trend. Just means a stolen momentum. What could that be? It just could be a narrow range day or a going sideways day. That's all. And it's another way of just saying that this is not a good place to be a buyer when it breaks out. And actually, there are some systems that do exactly that, meaning, let's just get a little drawing thing out here. They do exactly that, meaning they'll use this, and they call this a breakout. And rather than buy at support, they buy after a greater than 100% retracement, which can work, right? So you've got this sign of strength, but where are you going to put your stop? What many do is they buy here and they stop out there, and then it's going back up again. So in general terms, as we look at it, let's be a buyer where buyers have shown up before rather than where sellers have showed up before. Simple, common sense kind of stuff. It works. But money management is the key to even this particular entry strategy. Whereas, yeah, if you can put your stop down here somewhere and share size it accordingly, you're not going to get hurt very bad. And you're probably going to have to sit through some wiggles. Sometimes maybe it would only be one bar and it takes off. That's a continuation pattern. So we'll see how that plays out. Let's clear those lines. And Qs. Right, same story. Popped up, came in. We've seen this for a while as of late. The similarity between the market indices, where they kind of look similar in how they move, not exactly, but yeah, Alex, that's one strategy. You buy high and sell higher, works until it doesn't. And as I said, as long as you manage the money properly and know how to add to it. Most people don't. And that's the danger of others in the room that may follow you doing that without having knowledge of money management and get destroyed when it doesn't work. So there's a message to those in the room. If you're going to buy high with expectation of buying higher, you better understand even basic money management, or you're going to have some painful experiences. YM. Now, this one looked like it was going to be the leader yesterday based on the intraday charts. You know, it had the big void. It eventually got up there, but it was lagging, which is was a little surprising because it was a nice looking setup, but it lagged and eventually brought up the rear. But it just peekabooed last night above the prior high there. So it didn't get above there yesterday. It got above, this is the current bar. And so it just peekabooed above there. And there's another concept of the greater than 100% retracement. And then the pullback. It doesn't end the trend, but let's see if it can hold up here. One of the things I mentioned yesterday was the fact of buying near prior highs like this has the risk of an M top. Now, we don't have any evidence that that is in place yet or it's going to happen. But when you have buy setups so close to where sellers showed up before, that is a risk. And so keep it in mind. We'll see how this ends up at the end of the day. We're into the Thanksgiving period where it's typically bullish. You know, I've seen the days before Thanksgiving be negative days, and then, which of course is tomorrow. And then we have the holiday, and, you know, Friday morning, it's off to the races again. So, you know, one negative day doesn't change a trend. As you can see right here, you know, pull back right here and so on. Trend is still up. Now, the surprising big performer was the Russell. which we've talked about forever, the possibility of it taking out this range and bringing up the rear. And so why did it drive this so hard to the upside? Well, there could be fundamental reasons, of course, why small caps outperform, so on and so forth. But just technically based, because this was consolidating so long and the negative push to the downside that occurred last week, I mean, we could assume that there could have been a bunch of shorts in here that got caught on the wrong side and got ripped up as this, and then it just fed on itself. So let's see what happens. This was a big wide range day yesterday, obviously, which is typically followed by a consolidation day. So today may be just that, just a resting period. Let's just look at the ETF, which you can see the big giant wide range bar there breaking out over the range, and this void that we've talked about for months. If it could get over here, and we talked about the bullish price action sideways at resistance, and now we've got the confirmation, which now suggests it's going to go higher. All right, so on calls. Oh, cool, trader. I want somebody in the room was buying some calls based on some of the conversations we were having yesterday. So they must be up very, very nicely. And there's the potential now for this to continue to move up. So even if today is a resting day, no big deal, right? Actually, it's a positive to have a resting day. Well, if you're already long, excuse me, if you're already long, sure, why not just let it rip to the upside and keep going? But as things rip to the upside, they become less sustainable because too much too fast typically ends up with a deeper retracement. Whereas if this was to have a resting day today and maybe even tomorrow, Friday, this thing could be off to the races with that seasonally bullish day after Thanksgiving, with it going much higher. So we'll see. You could, the little breakout here that failed. And so that'll going to create some uncertainty here at the open. And they said, maybe it's just going to be a choppy day here where prices consolidate yesterday's gains. Oil's still acting pretty well, right? The breakdown failure, the 180 reversal, giant 180 reversal, and now consolidation at the top of the move after taking out the high. All right, same concept here as here. Right? I mean, it's just a different time frame of consolidating at resistance after a move up suggests a push higher. So consolidating, right? There's resistance here, like that reversing, bullish price action. So maybe some oil stocks will maybe can bring up the rear if this continue to stay strong. Bonds are up here a little bit this morning. They're at resistance. Not sure what they're going to do. Like, this is the same concept of, here's a turn and it's a move up. Do I want to buy here? No, not after a red bar, not in this time frame. But it's right at resistance, new resistance, right? With this red reversal bar. Can it get through it? Well, that's the unknown. And why, if you want to buy here, well, you put a tight stop sometimes, a lot of times, you're going to get wiggled out. So not a great setup to get long right next to an area of resistance without some type of consolidation going on prior to getting in. Gold down again, but coming down toward this swing low here. And for those that are new, we've been talking about this flag, which is kind of long in the tooth, so to speak, for this kind of move up. It's gotten kind of long, but can this turn into a W and move up from here? So we see it's beginning to stabilize in the area of this prior bottoming tail bar. So even though it's down here, it's in the area of this swing low. So this was the place, if you wanted to be a seller or to short, up near what we call minor resistance versus shorting it down here near support, where theoretically could go right back in your face. Right? We'll look at SPX in a sec since we're done here. And silver, same story, and it gapped lower and now it's reversing. So really simple concepts of support, resistance, and trend. And I'll drop the link for those of you in YouTube in a little bit for the MT Live that we'll be doing tomorrow, which will be on YouTube as well as you can in the chat room. But the focus of this MT Live is going to be the basics, the simplicity of technical analysis that works without all the hocus pocus lines and indicators and so on. So no matter your level of expertise, I'm sure you'll find it helpful, and probably even more so if you have some of those squiggly lines on your charts trying to make sense out of price movement through them. So SPX, what to do with SPX as a 0 day? Well, it's not going to be a 0 day expiration since it's Tuesday. It's a little tougher. So let me just go back to the futures here for a second. SPY to look at this. So as far as a call spread, which is where the juice will be, what we call the premium, I would want to see it break below that 15-minute wide range bar there at 8 o'clock. And I think that could put a cap on the upside if that wide range bar would fail, McGraw. And then, of course, the downside probably isn't going to have much juice, my assumption, but we'd have to assess that and see where buyers want to step up here and whether it maybe forms a trading range over the first 15 to 30 minutes that would give us a better idea. So we'll see how that all plays out, a little after the open. But I'd say initially as a guide, well, you don't have this on SPX, but just looking at the futures, it's not as clear here on the 15-minute of the futures, but we need to see it break some support. So let's just call it 3130 would be a start of some type of a break, since it's hanging at this resistance here, 3135. And of course, I'm not crazy about this low. I mean, ultimately, a break below that low there would really put in the top. But at that point, of course, we have to question whether there's going to be some juice up here to do that. And so you're saying 3,100 on the 15-minute chart of SPX as a floor. I would agree with that. If S&P's SPX got down to 3,100 today, I think the market's in trouble, especially if it was to close down in that area. So that should not be what happens after a green bar like that. So yes, theoretically, that should be like a concrete floor under the market for now. Yeah. All right, let me turn it over to Dan.
All right, good morning, folks. Yeah, you're saying 3,100. I think yesterday's low. Yeah, it shouldn't be violated. So that's a little higher, obviously. All right, all our opens are fine. So let's go right to gappers. Of our opens, there's not much volume, but deck, we entered this on a late day breakout. If it is gapping up here to 166 and change, we will definitely be selling half. It's just no volume, so it's hard to tell. Azul, bearish gap down here, nothing to do with it. Little Fitbit, I thought Google was buying this, but there's, for some reason, some pre-market activity. But I'm not messing with a buyout. Now there's Deck. Baba started trading on a Hong Kong exchange, but nothing to do with that. Amba, $60 bullish gap. YouTube's asking about Angie. We mentioned that yesterday that I did like it, but I said that because of these overlapping bars, I was preferring a retest, which obviously we didn't get. And that's a big old bar after multiple up bars, so nothing to do with it now. Weekly has a big price void to, 10, 11, 12, I don't know. I would do nothing with it today, possibly see if you get an inside day and then a 1, 2, 3 continuation. Pan W. Earnings getting whacked here, 229. Nothing to do with a big gap like that. Agilent, bearish gap at the support. BNS, flat, topping pattern. 30-minute low could be a short idea for day trade and or a call spread. It actually had a bullish pre-market gap. Look at that, 58.50. 58.50 would have been a bullish gap. PVH up a little bit. That has room. Look at this. Look at the weekly. That is a beautiful reverse head and shoulders. Left shoulder, head, right shoulder. The right shoulder is a little lower, but you had these bottoming tails. You had a little retest. And we're going to be talking about these tails in next week's MT Live. But that tail right there, retest, higher low of this, that's your entry over that for a core long. So this still has room into 110. You know what? I think we were core long this. And we might have got stopped out on this pullback. Yeah, 30-minute high. 30-minute high, I like that. Cal, 10% drop, $20, very bearish gap. Now see, that one's not too big. So that's a beautiful 30-minute low candidate. Cal, target, I don't know, 18, 19. BECN, 31.33, gapping way down here. Nothing to do with that. McGraw, Zulu Sierra. Yeah, looks great, McGraw. Looks great. So yesterday was your breakaway gap from a bottoming pattern. That's both for directional and a put spread over yesterday's high. Stop yesterday's low, sure. DY, 51.67, it's gapping to the top of the range, nothing to do with it. Echo Victor, can't tell where it's gapping, but that has room to the low 50s. Let's watch that 30-minute high. LUB, no volume, you're gone. Say no data. This must be a Kerbal. Oh yeah, it's 5 cents. I don't know where that came from. AMWD, beautiful close yesterday with a price void to 120. This looks great. I'm running out of space here. I'm putting all these in little windows. All right, so this looks fantastic. Actually, I'll put them in this one, AMWD. It's a beautiful close. There's your bottoming tail. That was very powerful. Downside shakeout. And it has room to go on the weekly and monthly. Gapping down to 17, nothing to do with that. Tech data. Gapping down a little bit. I'll come back to it. CHS, little $4 stock. I got no interest in that junk. CTRN had a beautiful breakout. Look at that, daily, weekly with a price void. but now we need a pullback on the daily. NTNX 3480. Here's a excuse me, a big old reverse head and shoulders again. This looks similar to that other one I said. But my target, just looking at this weekly, would have been like right here at 35 bucks. And that's where it's trading right now. Nothing to do with that. ADI 109 bearish gap. This McGraw looks great for a call spread. If we can sell it, you know, the 115s. So I'll watch that. AMF, no pattern. DKS, big old gap, breakaway gap, 44 bucks. It's a big gap, 10%. So it makes it hard for your stop. But target 50 bucks. Let's come back to that. 97. Oh yeah, Dollar Tree's getting whacked. Wow. That's quite a shock pattern. That would be in our shock video. You know, it held here, retest, red bar ignored, but now green bar ignored. That's in pain. Pearl is garbage, you're gone. Momo, no pattern. HPE 1655, that's a bearish gap, but no great price void. AMBA 6080. McGraw put spread under yesterday's low. AMBA typically has juice. Disney, remember yesterday I was talking about buying this over Friday's high. And I was definitely going to put it in the letter for a put spread, but there was no juice. Gapping up another $2. NTNX we looked at. GBT, big old gap. And I say whenever I see something rally this much and now you're gapping up 10 bucks or whatever, that's more of a gap and crap candidate. So McGraw, that would also be 30-minute low, a candidate to sell a out of the money call spread. 77 bucks BBY. It's a bullish gap, but it's, you know, under resistance. Burl, very sloppy intraday pre-market. It had earnings. Yeah, when I saw it up 214, that was a beautiful breakaway gap. See, McGraw, that's a breakaway gap. It's breaking out of a multi-month trading range. You sometimes send me crazy things, what people call breakaway gaps. CCXI, I'm just guessing that's either a drug stock or a buyout or something. You don't go from 8 bucks to 35. So I just have no interest in you. Alex mentioned SABE yesterday, and I said I like it if we can get a 1, 2, 3. And DXC, we have a put spread on this, but you know, I wanted to watch it again to see if we can get into a directional. The weekly has room. We were watching this one, bottoming pattern, bullish weekly, BJRI. NDSN, close with a topping tail. This got whacked yesterday, Kilo Lima. Look at that 15-minute chart. It's still in pain. That looks like a new short right here. That's a bearish 15-minute. Oh, our deck. Yep, sell half a deck. $166. That's, you know, $2.40 gain just from overnight. Diamond's coming in hard. So let's just chill here for a few minutes.